The SPY was lower in Friday's trading session, down 1.05%, closing at 595.01. You can see we've been finding some support in our lower dealer cluster zone. Currently, that support zone is between 595 and just below 590. This is where dealers are actively buying the underlying security in order to hedge their options positions. And so we've been seeing quite a few bounces here over the last several trading sessions. Our upside dealer cluster zone is between 605 and 614. And so you can see the 605 level is clearly an important level. This is where we broke down during the FOMC meeting on December 18th. And so we need to get back above that level to resume bullish momentum. Right now, we're kind of in no man's land, just trading in this zone, mostly between 590 and 600. So let's just take a little bit of a dive under the hood. Let's first look at the historical GEX for the SPY. Last time we closed down in this level, you can see here negative 1.5 billion after hours on Friday. Last time we were in this range was, again, back on December 18th and December 19th after that FOMC meeting where the market really sold off pretty nasty. We had a pretty significant bounce off of that level. If we come back up to the chart, you can actually see we had a little bit of a lower low and then the bounce. And that matches up exactly with what we were seeing in our gamma exposure data. And oftentimes when we get down into those zones, those mark temporary bottoms. And that's certainly what we saw here coming off of that FOMC meeting. So we are again back in this zone. So we'll have to monitor the gamma exposure data as the market opens on Monday. Taking a look at our GEX data graph, you can see the 595 strike was all the zero DTE that's expiring as of last Friday. Currently, zero gamma is at 599. Implied volatility is still relatively high. This is our GEX weighted volatility gauge, 75.3. That essentially means that implied volatility was lower 75.3% of the time in the past 52 weeks. So we still have elevated implied volatility, even though the volatility index has come down into the 15s. We'll take a look at the VIX here in a second. Another thing to note, our GEX intensity gauge is negative 2.16 billion. This is near the far end of the negative range on our gauge. Again, this is an area where we oftentimes see big bounces in the market. We'll see if that comes to fruition this week. We have to look and see what the data looks like come Monday morning. Next, let's take a look at the volatility index, the VIX, back down below 16, 15.92 as of the close on Friday. We had this huge spike after the FOMC getting up to 28, and it has since crashed. I mean, absolutely crashed by nearly 50% in just a few trading sessions. And this is one of the biggest indicators that makes me think that there is potentially more bullishness ahead. We're in a low volume trading zone here until New Year's. As long as we stay below this 18 level on the VIX, I think that we are in a good consolidation range for the market to go higher in the coming weeks. And so we'll have to monitor the VIX along with the gamma exposure data to see if that sustains in the coming days. Next, let's take a look at the Qs closing at 522.43 on Friday. The GEX data, which you can see here in the purple bars, the GEX data is pretty evenly distributed between 500 and 540. We're kind of wedging into this 525, basically between 520 and 530 as we're wedging into this zone. Market participants appear to be unsure where we're going to land in terms of mega cap tech. And so, I'm not getting a very clear signal here on the Qs as far as market participant positioning to the upside or to the downside. So that's something that we're going to need to watch. I think this is going to resolve itself one way or another, probably this week or the first week of January. Are we going to see a breakout to the upside or a breakdown from this wedge consolidation zone that we've got going on here? Let's consider some other risk on positioning by taking a look at Bitcoin trading just above 93,000 currently. We bounced from our lower dealer cluster zone at the beginning of last week. We got up back up near the 100,000 strike, the big 100,000 strike that we've been discussing for the past couple of months. Got back near it, rejected, back down into this lower dealer cluster zone. So we need to see these levels hold, same as last week. We need to see this level hold. We do have gamma exposure still at the 100,000 strike and the 110,000 strike. Market participants continue to come into the options market, positioning for higher prices in Bitcoin. So it's a pretty wide range just over the past couple of weeks. You can see basically bouncing down to 92,000, upwards of 108,000 back down. And volatility on Bitcoin is not unexpected, but we are at the lower end of this range here. So we need to see this hold and another attempt back up at this 100,000 strike and break higher in order to feel comfortable that risk on is really back. Major levels, though, are on the downside. It's going to be right in this 92 to 93,000 zone. And on the upside, my initial range is going to be the 100,000 strikes. We need to get some clarity either above 100,000 or below 92,000. Next, let's take a look at Tesla. Tesla closing 431.66, down just under 5% in Friday's trading session. The volatility has been pretty wild, both to the upside and to the downside. And again, Tesla is another one of those names kind of consolidating, coming into basically a decision point in terms of price direction. As far as the GEX goes, though, GEX is all positioned higher. And remember, GEX is not a crystal ball. What it shows you is where market participants are positioned in the options market. These are going to be call sellers. These are going to be call buyers. It's going to be option dealers. We try to narrow that down into one data point to help us see where is everybody focused in the market. And currently, we can see with Tesla, everybody is focused at the 500 strike. And all of that positive GEX at the 500 strike has been there throughout all of December. So even when we were trading back here, we were seeing this large 500 strike GEX position. And so that's one of the most beautiful things about GEX is that it shows you where market participants are positioned. And then you get these gamma effects, which you can see here in this example on Tesla. These gamma effects at these large GEX concentrations act like magnets, driving momentum into those levels. So we didn't quite make it there on the attempt in mid-December, and now we're seeing some consolidation. It looks like market participants still want that 500 strike, so that is something to be watching for. If we can get a breakout above this 460 level, 500 is definitely going to be back in play. There's still volume coming in. You can see even on Friday, nearly 100,000 contracts came in, maybe 90,000 contracts came in on Friday at that 500 strike. So something to continue to watch on Tesla. Next, let's take a look at Palantir. Palantir continues to blow everybody's mind in the market, trading at 78.80 as the close on Friday. Did have a down day, down 4%, but everybody is expecting Palantir to get knocked back down into the 50s, and it just won't go down. Our lower dealer cluster zone has moved up now to the 75 strike. Upper dealer cluster zone has been at 80 basically throughout December. This is another one of those examples where we were seeing big GEX at the higher strike all the way at the beginning of December, and we actually did tag that earlier in December, retraced, and then we had another attempt leading into the Christmas holiday. So getting a bit of a retracement here, but what's the most surprising to me is the continued volume at higher strikes along with the continued positive gamma exposure at these higher strikes. So doesn't guarantee that we're going to get up into these levels, but what it shows you is that market participants are continuing to position in these higher strikes. So something to watch for, especially if we see consolidation or continued consolidation around this 80 strike. These gamma effects will continue to help price gravitate higher after consolidation. That's a lot of times what we see as we consolidate around these big GEX concentrations. Let's take a look now at Meta. Meta trading just below the 600 strike as of the close on Friday. Really interesting position here on Meta, bouncing a couple of times from this lower dealer cluster zone. This looks to be a consolidation zone here between 580 and I guess the 585 level. We've got big GEX at the 600 strike and big GEX at the 650 strike. So market participants continuing to be bullish on Meta. It had a huge run up. And so like many other stocks has been consolidating over the last couple of weeks. In particular, again, you can see the FOMC. Meta was not hit as hard after the FOMC as a number of other names. But again, it was hit back down into this large GEX here around 600 and has basically been consolidating since then. And if we just zoom out here a little bit and look up the options chain, this 700 strike is starting to grow, meaning market participants are positioning at the 700 strike. This is likely further out in the options chain, further out expirations like into the February and March timeframe. But that is something to watch. We need to see if that continues to grow. Of course, we need to get back above recent highs at 650 before 700 becomes a real target. But that is something to keep your eye out for as we move ahead if momentum comes back into Meta. And guys, if you want access to our gamma exposure data and our option flow analytics, head on over to geeksoffinance.com. You can sign up and become a member. We're currently running a holiday special, $300 off our yearly portfolio manager tier subscription. We do have a few spots remaining, so sign up while you can. We'll be running this promo for a few more days. Use code HOLIDAYS at checkout. In addition, our members also get access to our premium channels on Discord. You can check out what we're doing in our own portfolio, our trade ideas, as well as interact with a number of talented traders, which are also members in our community. That's something you definitely want to check out. We've got a vibrant trading community. I'll put a link down in the description below. You can check that out for free as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.